Hey guys, Mike here. So another interesting day in the market, and oh boy, was United Healthcare, UNH that is, the stock of the day for multiple reasons. And I think it achieved something I've never seen a healthcare stock achieve. And so, I mean, if you've seen this before, we'll go into it. I will also show you a prime example of insider trading that if I was at the SEC, I would immediately launch an investigation and put somebody under the jail because it would be so easy to prove. But our government, who is bought off, and SEC is useless. This will not happen, of course. That's why insider trading takes place from our Congress members, allegedly, wink, wink, and of course, other people. And I will show it to you, and you can see it and go dead to rights. Like somebody knew something. There's no ifs, ands, or buts about it. We're also going to listen to Stephen Cohen in a very short clip today because he's one of those guys. He's one of the most successful hedge fund managers ever. He also owns the New York Mets. That's how much money he has. And, you know, he was saying some stuff today, and it kind of goes with the narrative of what the picture a lot of people are painting, okay? And so you might also saw some pullbacks in some of the high beta stocks, the Mag 7, that kind of stuff, what was green, defensive. And so we'll talk about that because people were I saw some people flipping out all over Twitter about that one. So we'll get into all that stuff for you and some charts. But when you look today, and before I think about it, please put your questions in the comments for Saturday's video. Inflation data, PPI, actually come out less than expected, which was good, but retail sales also were suppressed down, core retail sales that is. So of course, you know, which one is the market looking at? You don't really know. Of course, we had this big run up. So, you know, there's that right there. Unemployment claims came in as expected. Again, you know, the job market's hanging in there. And so remember, you're not going to get to see, you know, what's going on with inflation. Probably, I think May is going to give us a better picture because remember, most of the tariffs actually got implemented in April. And so now you'll start to see them start to really flow through the system. And so we'll see because Walmart came out today. So we're going to raise prices because of tariffs, you know, and people are like, oh my God, what? You know, and so we'll see. And remember, just like 2020, companies, I told you before, they're going to use every excuse they got to raise prices. That don't matter what it is. And I told you in 2020, I said, oh, trust me, they're going to raise those prices and they ain't going to lower them. Okay, that's the way, oh, it's inflation, inflation. Then inflation fell off a cliff. They were like, yep, prices are still where they're at, right? And so that's just how it works. And so remember, at this point in time, people aren't mad about inflation as much as they are about still where the prices are at. Okay, people are really upset about that. All right, and then because inflation is 2 to 3%, you go back to 2017 and 2019, it was between 2 and 3%. You just didn't notice it then because prices were way lower. Okay. So here we go with Stephen Cohen real quick, and then we'll talk about it on the flip side.
Here in New York, and was asked about whether we're in a recession. Cohen said the whole thing with Trump, these are his words, and what happened with China was, quote, a little bit of a surprise to him.
As far as, we're not in a recession yet. I think we are going to have significant slowing growth. We think it'll probably be, you know, like a 45% chance of recession, right? So that's not insignificant.
Cohen added that Point 72 doesn't think the Fed is going to act right away because they're still worried about inflation and tariffs. And next year, they think growth will be 0.5% or lower. So he said it's possible we go back to the lows in terms of the markets, something like 10 to 15% down. Not a calamity, he says, but he says what Trump has done actually eliminates the, quote, dire scenario. He thinks the markets will be in a trading range for a while, noting what worked in the past is not going to work this year.
And this is the big thing. I mean, I've never seen this narrative painted more by more hedge funds managers, you know, money managers for the rich, this kind of stuff, where it's like, well, you know, again, we know tariffs are in a way deflationary most of the time because what happens is it slows growth. Okay, I mean, it's a consumption tax. We're all on the same page with that. It's consumption tax, right? The difference is now what's been going on is the fact that the top 10%, I'm gonna give more data on this on Saturday's video, make up more of consumption, almost 50% of consumption, which normally they were, you know, top 10%, you know, were about probably, I don't know, 36% about maybe 10, 20 years ago, and now all of a sudden we're half. Okay, so that's the big difference. That's what keeps holding this thing up. Okay, the people with the appreciating assets holding it up. The people with unappreciating or depreciating assets, as I say, you know, hadn't got any enjoying this ride. They're the ones getting crushed. They're the ones going to get crushed by the consumption tax, which is tariffs. You know, they ain't happy. That's the big difference now. Okay, it throws a lot of these metrics off. So again, if tariffs stay in place, we should see, maybe, we'll see, retail sales we get, month after month should probably slow down, but we're going to have to find out. Again, there is no model on Wall Street. They can run them all they want to. And again, he even said in the longer part of that interview, which was, we don't know. I saw economists today saying, we just don't know. We've never seen this before. We've never tried to do it before. So we got to let it play out and see what happens. But that seems to be all the narratives, that we might visit the lows, of course, later on, third, fourth quarter, whatever. Everybody's expecting that the threat is the growth slow, a consumer type of recession. And remember, you're not going to get 35, 45% drops without a recession. That does not happen. It's never happened before. I went back through all the way back to the Great Depression. Never happened, okay? To get the really big ones, you have to have a recession, and you need something to trigger that recession, okay? So just keep that in mind. And the other thing about this rally, every time there's a dip, it keeps getting bought up. And yeah, we're overextended. I showed you yesterday, right? So you saw a lot of stocks pulling back today. But the S&P was still, what, 0.3, 0.4% up, right? And the big thing is this right here. CTAs, told you about them, right? They keep buying. They keep covering those shorts, okay? And so if they start to come in as we get these levels, they really are forced to buy. They don't have any choice but to buy, okay? And so that's what people don't know. Is like, they're gonna start chasing here, wait for a pullback. You've seen the NAAIM exposure index. They actually pulled back last week, but they were buying from the 14th of April on up through, what was it, May 1st, I believe it is, May 7th, excuse me. They were buying, right? And they took a little off last week. We'll see what they're doing this week. Probably taking more off. Again, when you start getting the 100 area, I mean, that's, or a 90 area, excuse me, and then you go back, the 100 area, that's when they really start selling down. But, we got back up to 80, which is a big way from 30. And so, again, nobody knows if these big fund managers, right, are going to start in CTA and everything will start just moving in because they have to move in, or we get the pullback first. For me, I would hope we get a pullback first. When we go on the chart, you'll see what I'm talking about. And it's not even that big a pullback maybe, okay? But when you look at this right here, UNH, we got to talk about this one. Oh my goodness. Oh my goodness. We talked about it yesterday. Said, boy, don't catch a falling knife, right? Well, man, after hours, more news came out. Some people said it was fake. Some people said it wasn't. They're already under investigation. We already knew that. And, so again, the DOJ supposedly informed them. They said they didn't inform them, but just look at these gaps down. I mean, that's a rare thing. Like, this is one of those meta type indices. Remember when Meta imploded? That's what you're seeing. I mean, that is 60% down in what, 33 days, I believe it is? Let me measure this out perfectly. That is 59% in 34 days. Holy moly. If you measure from the very top, because remember this thing had already been selling down, but if you measure from the very top, it is down 61%. Oh, I mean, you look at this, imagine being retired. This is why I feel bad for retirees right now in this year, because this thing is at 2018 levels. That's where it stopped today. Okay, and I mean, they have been DCAing, let's say you've been in this 10 years, since 2016. You've been DCAing up the whole time. You've been buying and buying and buying and buying and buying, and many different ETFs hold this. It's the largest insurer out there. It's a cash cow. It makes crazy amounts of revenue, right? And so it then pays a dividend. And so that's why a lot of retirees have this in their accounts, and a lot of ETFs do. And it's like, man, you are so underwater right now. 60% of your portfolio. Imagine, remember this, when you're retired, you're not contributing anymore. The majority are pulling out, right? So this big drop of 20%, what are you putting in? Your Social Security check? I mean, most people, the majority of Americans are drawing off their 401ks and their IRAs and stuff like that and living, okay? They ain't got no big paychecks coming back in to start DCAing in anymore, and so I look at that and I'm like, man, and they had good reason to be in it. I mean, it has been a good performer. And so to see that, remember, the largest health insurer in the country. And so, wow, to see that happen, it's just a rare thing. It's something you'll always remember. I remember Meta. You'll never forget that Meta fall, right? The metaverse, my butt. You'll never forget that. And so this is the case. And is it the bottom? We don't know. I mean, look at this. The RSI on the 1 hour, 2 hour, and 4 got down to like 4. The daily got down to like, I think it was 10 or something. It's like the most oversold has been in since 2008. It's oversold on the 2-week now. It's oversold on the weekly. It's oversold on 2-week. Ain't got oversold in the monthly yet. Could happen. And so we don't know if there's any more bad news, but let me show you. This is something I've never seen a healthcare stock achieve in my lifetime. Look at this right here. UNH traded more premium than the SPY and QQQ combined. Those two ETFs always, I mean, my God, they trade more than anything else on the market. And that's insane. I've never seen that before. And I'm telling you, trust me, I was enjoying it. Oh my goodness. I mean, selling puts galore. Let me tell you, closing them out for 85, 90% in less than like 5 hours of work. Are you kidding me? And so good. I've told you the fibs matter, right? Came down this golden pocket. We talked about this area. I said, man, if this comes down this area, holy moly, I thought this was a Saturday video. What a buying opportunity that could be. And a lot of people piled in, right? Around that 248, I think was the bottom. And that could absolutely be the bottom, because if that breaks, guys, look at this. I'll show you this yesterday. If that breaks, then this thing is in way more trouble than people thought. Oh my goodness gracious. I mean, you're talking about a stock that was up to 600 and people bought it for 250 today. And again, does that mean it's the bottom? It might not be. We'll see. You know, you got to give it some time to work a bottom out or something. We'll have to find out, especially no news. But again, there's a gap below and there's a gap above, okay? And you look at this right here. Look at what people are doing. You know they knew stuff, by the way. So here was a $643,000 bearish open position, open Tuesday. They bought 1,550 contracts at 414, targeting the 300 strike by Friday. Those same puts are now worth $46.86. So I did the math for you because it's 1,550 contracts, right? That is 6.6 million. So 643,000 turned into 6.6 million in 3 days. Look at this right here. This right here is what you call insider trading, allegedly, of course. This whale added 3 million of far out of the money puts just 1 minute before close yesterday. And then the fake Wall Street Journal reported the DOJ probe, and then boom, it imploded. And they targeted the 280 put. So just imagine, I mean, this person made so much freaking money off this. And to tell me that's not insider trading, you gotta be out your mind 1 minute before the close. Come on now. Nobody's putting $3 million on puts 1 minute before the close unless they know something is coming out. So of course, like I said, if I ran the SEC, immediate investigation, I think it'd be a pretty easy open and shut case. I could be wrong, but you know, let me know what you think about that in the comments. Let me know if it was you. Hey, that'd be even better, right? Or you know who it was. Now, obviously, look at XLV. We talked about this yesterday. It got its bounce today. You can see why. I told you it has the bounce. And a lot of people are lining up between 119 to 124. Okay? That's where a lot of people want to try to get in at, because if that fails, oh boy, XLV is going to be a whole lot cheaper. But again, it's trying to hold that trend line. It's trying to hold right there that volume node. And it's bouncing where it needs to bounce. It could come down. We'll see. Okay? Maybe this is the bottom for all of them. If UNH continues to recover, it will drag a whole lot more healthcare stocks up with it. And when you go in here and see how XLV is performing against the SPY, obviously it's terrible. Okay, the SPY is heavily outperforming it. And when you look at the recessions, that's the shaded areas to the left, you would think, wow, I bet you healthcare stocks are just crushing it. No, just because it's going up don't mean healthcare stocks are actually doing great. It just means they're outperforming the SPY, right? What happens in a recession? The SPY does way worse than healthcare, as healthcare is a defensive play. You can see right now, the SPY is heavily outperformed XLV, and people are looking for some sort of rotation, because you can see rotation coming down, right? And by the way, look at that line where we're at right now. It's bounced like 4 times bounced, and then it was 2 rejection points. Well, this is why people look maybe like a short-term rotation coming into this, and so watch that line very carefully in this ratio. This is how rotation happens. This is what tells you if there's rotation going on. But going to SPY right here, the SPX, you can see this trend line still sitting there holding, right? So 3 days we bounced up to it. You can see this box I put in here a while ago, and I said, don't be surprised if we sit here just in this range, which now we're 4 days into that box. And so that's where we're at. We keep bumping up against it. If we break through the trend line, of course, we're going higher. There's no doubt about that. But again, coming down to this area where the 50, week, the 200, all that stuff, the gap, it's only a 3.5% move down. It's not even that much. I mean, you know, look how far we've moved up. Okay, so people are looking, and what I think everybody in the most watching for is a retest of this to see if it breaks or to see if you get the bounce. Okay, and if it comes up, especially if it breaks underneath and comes back up and rejects, then you're probably going to see a lot of selling pressure. If it gets back through it, absolutely, I think that's probably it. That might be the last pullback you get for a minute. Not saying for the rest of the year, I'm saying for a minute, okay, to go through June, July, that kind of stuff. And don't forget, we moved up 22% in 38 days on the S&P. I mean, that is a huge move. We are not up to all-time highs, that is for sure. But what's crazy is, this was mind-boggling. We are 4% away from all-time highs. 4% away. And I told you, I will fall out of this chair. I'll do it on camera. I'll throw myself out of it if we go back above all-time highs without any kind of Fed cuts, any kind of injection of liquidity or anything like that. I'll be stunned if that happens, because there's so much other stuff. It just isn't there that was there. But we'll see. We'll see. I'm definitely not rooting against, that's for sure. And again, you see defensives, right? I even put Netflix in defensives now because I think it's in both categories. It's a high growth stock, but if you look at the last 5 days, it's been following all the defensive stocks. So the last 5 days before today, it was down 1%, while all the other like Mag 7, 8 stocks, all these other tech stocks, up 10 to 50% or something in the same time frame, right? Just been rolling over the last 5 days. So I think it's actually in both categories. Hadn't seen a stock like that in a while. Now, did want to update Google. This did not stay above 165. It has to get above 165 and stay to make the run to 170. It shows how just weak it actually is. Again, it's one of the very few that hadn't reached its 200 or its 50-week moving average. HIMS right here, close that gap right there. I know people are afraid. They go, oh my God, it was down 10%. It's up 165% in 23 days. It's due a pullback. We talked about this. Oh my goodness. And guess what? It came down, it touched into that gap right there, and that's where you got your bounce. But again, we filled the gap. That was the target, right? 0.79 fibs there, all that stuff, and you're up huge in this. Okay, these are high beta, high flying stocks. People are going to take profits on this thing. That's just the way it is. And so we end up having to take that away. But yes, I saw people, oh my God, it's down. I can't believe it. Yep, that's what happens. I mean, this is how stocks move. They go up and they go down. That's what happens, okay? Another one, Tesla. Oh my God, it's down 4%. Yes, it's moved up 29% in 6 days. This is a mega cap stock, not a low float stock. It moves like a meme stock. If you want to go from the bottom, 57% in 23 days. That is unbelievable, right? It's at the 0.5 fib. It needs a pullback. I know a lot of people, I mean, I'd rather buy it at 300 than buy it at 342. If you think there's going to be a run into, Robo-Taxi Day or something, that'd be cool, wouldn't it? Again, we'll have to see. Big OPEX tomorrow. Don't forget, big OPEX tomorrow. We get some funky stuff that happens on there, but there is a big gap down there. It's only a 10% drop from here to get it, and you got a whole lot. You got moving averages, 200, got the year-to-date anchor VWAP, all the stuff down there for support for a bounce. NVIDIA is another one. That is not normal. This is not normal. This movement is not normal. Okay, I showed it to you yesterday. Again, it gets like a 2% pullback. Everybody's like, oh my God, 2%? Like, yes. How much has it moved up? I mean, there's so many gaps. But again, what will be healthy? Coming down to that 250 week where they're at, golden pocket area, and getting a bounce, right? Mitigate some fair value gaps, mitigate some gaps, get you a bouncy bounce off those major moving averages. That would be great. That would be super bullish, right? And again, when you're looking at S&PX, let's go to the monthly chart. This is the momentum indicators on the monthly chart. It doesn't look like 2022 yet. Look at this. This is turned up. Hadn't crossed that moving average, but it's a bigger turn up in 2022. And you can see that MACD right there. Again, this moves like a freighter, okay? So what you're looking for is to see, let me get a straight line right here. Remember, the RSI can turn back down. We'll know at the end of May here. We only got 2 weeks left. And soaking that MACD, but that's what we're looking for, okay? To see if that thing flips back up and starts doing a bullish cross up on the monthly or not. And I mean, I don't think I've ever seen it do this before, but again, I think the Qs, like I said yesterday, have only done this big kind of rally twice before. And you can see on the weekly what's happening. You're about to get a bullish MACD cross on the weekly, on the S&P right there. The RSI is already above 50 on the weekly. It's crossed that moving average. And so what you're looking for at the end of this week going next week, do we complete this cross and the histogram start to get above the zero line? And that is not a bearish thing. It really isn't. So again, that's what we got to find out. So we got to see. We just got to see if the big boys are going to chase this or not, or let it fall. Okay, so tomorrow when it comes to news, nothing big. Building permits, housing starts, import prices, which I actually do want to look at, and then you got consumer sentiment. So that's what everybody's going to be looking at come tomorrow, but you got the big monthly OPEX. So it's going to be a very interesting day to say the least. So anyway, please hit that like and subscribe button on your way out. Put your question in the comments for Saturday's video. Think about signing for that membership, less than the McDonald's combo, only $7.99. And I'll see you guys Saturday.